Hello everyone and welcome to my top market setups for February 2015. My name is Martin Rimes of Hit the Mark Trading. Now we've got a lot to cover in a very short amount of time. Basically, I'd like to share with you how you can look at the big picture review of the global money footprint, find out where money's flowing. We're going to talk about specific markets for February trading. I use technical analysis, commentary, and seasonality studies. I think it's important, especially if you don't know anything about seasonalities, okay? Finally, we're going to end with an invitation for Rooster Call, a morning market brief. I'm going to let you have that for free for 30 days, and you can certainly get to know me through Rooster Call. Now, a little bit about me. I've been a full-time trader for over 10 years, been in the markets over 20. I've performed numerous speaking engagements, both webinars and live audience, including at some of these trading shows. I'm a big proponent of keeping the trading simple and easy. I like to have a big picture view drilling down to the daily and intraday time frames. I started Hit the Mark Trading in 2008. This has morphed into a nightly video newsletters for futures. So every single night after the market closes, I'm producing a letter. We're calling trades and managing trades. Each weekend, the Trader Weekly Review is posted. That's another big picture review, keeping people in awareness. Every morning the market's open, I produce Rooster Call. It's a morning market letter. I do have an option letter for equity option traders, and then about 4 times a year I will operate a boot camp, a total intensive immersion training boot camp. My next one will probably be in February. You can find out all this and more at hitthemarktrading.com. Now, remember, as we discuss futures, this is an incredibly risky business. Never trade with money that you cannot afford to lose. And you really need to understand that you can lose more than you have in your account. We were reminded of that recently with the Swiss franc, where one move suddenly went $30,000 against the trade. I suggest you consult a financial expert prior to trading with real money. Okay? Good. Let's go to the charts. Let's talk big picture. First off, CRB index. You can see that we peaked out in physical commodities in 2011. It's like excitement, quantitative easing, and then just peaked out because it just sunk in that there is no real global recovery. And we are just falling and falling and falling and falling, which tells you big hands, big institutions, big single traders, they do not see inflation on the horizon. They do not see a global sustainable economic recovery. This is why they do not want to own physical commodities. Notice how last year, right in line with seasonal studies, wow, everything just shot up and then all of a sudden falls down. It's this follows the seasonal pattern very, very well. This year, however, we're not doing that. We have done nothing but fall since the beginning of the year, okay? All right, so bottom line, money not flowing into the CRB, into commodities, nothing into physical commodities. This is why if you're a commodity trader, you're finding difficulty with stuff just not moving, even though you have a technical reason that says, hey, this should go up. All right, well, what about the bond market? The bond market, the #1 market in 2014, absolutely, continuing to push higher. Notice we're going higher against seasonal studies here. This is all because of central bank action. And now everyone who wants safety and security are buying U.S. bonds. And the Federal Reserve says we have bought a lot of bonds and we're not selling. So this market has strong underpinnings, big time. Money continues to flow into bonds, very much. A sustained, very, very large trend and momentum movement. Ignore what you hear on the financial channels. A lot of times you hear one thing and the people do another. This is black and white. Money is flowing into bonds. Well, let's look at the stock market. If money's not flowing into commodities and money is flowing into bonds, what about the stock market? Well, we look at the S&P 500 futures as our proxy. And what we find is, thanks to the central banks, every time there was a pullback, central bank action would pull it back up. Someone would give a speech, something, anything would happen. That's what saved the market in October. And now what we find is that the threat of the U.S. central bank raising interest rate has people concerned. We have peaked and we're just in a little plateau. It would be 1966 is our support. The red line simply means I'm watching what they call an ascending wedge. Tend to break down more often than not. The big line here on this weekly is this channel line, and goodness, if we break through that, we're heading for much, much, much lower levels. Absolutely. Okay, so money still flowing into the stock markets, still flowing into bonds, not flowing into physical commodities. Okay, now let's take a look at individual markets. Since I've got the ES up, we'll just start here. A word about my charts. This is the 34 exponential moving average. This is the commodity channel index. And down here are seasonal studies, okay? It's also important for you to know that I look at the commodity channel index, but all tactical decisions are made from the daily chart, okay? The daily chart. Let's go to the daily. And what we find is a head and shoulders. This is a very reliable topping pattern for technical analysis traders. So if I know that this pattern has appeared, and I know there's a lot of people around the globe watching this, I need to be aware of it. The orange line is our neckline. The black line is our channel line. I like to look for 3 closes outside of the channel line before I say, okay, we're going to drop. You can see we had 1 close below, and now today's action is above the line. Okay, the line holds until it doesn't. If we drop down, we're going to 1955. Got that? We're going to 1955. If we look at the weekly chart, we see that seasonal studies say we should drop at the new year. Well, boom, we did that. And now we're just kind of floundering. Things tend to turn around in March, very early March. So what I know is that if we drop down below 1966, we're going to hit that daily target I told you about, followed by a retest of the October low. Okay, a lot of support at 1882. So this is what I'm watching. It'll be an event breaking below 1966. I want to just show you one thing on the monthly chart. If we break this red line on the monthly chart, then it's pretty much assured we're going to go back down and retest this black line. Okay, if you're new to this kind of analysis, it probably is make your eyes glaze over, but anytime we break one of these lines on a monthly chart, it is a tectonic shifting of the plate. All right, let's take a look at a trade that we are in right now, and I'm talking about, today's date is January 29, talking about soybeans. So the market is looking like it wants to go lower. Seasonal studies say we should go lower and then possibly rise after January 30th. The problem here is the fundamental side, okay? So technically you can see our indicators not doing much because price is not doing much. Let's go to the daily chart, and the daily chart says we dropped out of a sideways channel. We're just heading down, consolidating. It wants to drop, and the target we've set is 941. The weekly says we can go to 915. Okay, so I expect that we're going to see continued lower prices. I don't think this will follow seasonality. Again, I can't cite all of the fundamental reasons, but it's a perfect storm for lower prices. The next market I want to take you to is the gold market. Gold, let me find gold. All right, this morning I said that we were probably going to have a whack day in gold, taking to 1253, and we had that. That's what I talk about in Rooster Call. This does not surprise us because anytime you shoot up like this, it ends in tears. Let's go to the weekly chart. And the weekly says, well, okay, we tried to bottom out here, descending wedge, so yes, it popped up. Can't seem to clear 1300. Seasonally says we should probably fall around February 21. That's just the backdrop idea. That's just the backdrop idea. Okay? I think we've already fallen. I think we're just going to keep consolidating and then possibly go lower. So this is what I'm looking at with gold. Let's take a look at crude. Everybody wants to know, hey, where's the bottom in crude? Well, we said back up here that we were going to go down to 50, then 44.60. Well, hey, we've done that. So the next target is 37.10. Is that really possible? Anything's possible. In trading, I'm telling you, anything is possible. What we have is an extremely strong seasonal tendency, and I mean this is a very high correlation, to start bottoming out around February 7 and then move higher. So what I would like to do on a chart like this is take my line and draw it like this. Say, okay, well, what was that day? Oh, this was February 28. So that means this year I'm expecting, what is this? Friday the 20th. After Friday the 20th, I think we should be moving up. But we're not going to see a move unless OPEC cuts production. This entire move down and the continued move down is going to be based on OPEC. When OPEC decides we're going to cut production, there will be a knee-jerk reaction. Understand that 50 is a psychological number. That means when people see 50, price go over 50, they're going to get extremely excited. Big time, big time. There's likely going to be a knee-jerk response taking this thing up minimum $5. And from there, they will just fall over themselves, pushing it up. It'll be an incredible exercise in crowd behavior. Okay? This is a market totally dependent on OPEC. That's what I'm watching for in February. Now, what about for those of you that trade any of the softs? I'm a bear in coffee. I'm sorry, I'm a bull in coffee. Pardon me, excuse me. So what we see is nothing special going on. We're bottoming here. If we look at the weekly chart, we caught this rise last year. Coffee is not for new traders or small traders. You can use an option. The option trade made $1,500 on a single position, an equity option. If you trade the futures, this was over $20,000 move from the bottom to the top here, over $20,000. So when we get rocking and rolling, yes, you can day trade this. The seasonals say we should be rising after January 30th, okay? So we're just waiting for that to happen. This is going to be a strong market for February, in my opinion. I also believe if we did not have this CRB index so low, that we'd probably be seeing more action in coffee today. Okay, there is a little concern about the fundamentals affecting supply, but when the seasonals kick in, that should be our ticket to much higher levels. All right, finally, let me just look in here. You want to know how low the euro is going to go. Let me look at that. The euro, we have it. Let me go to the monthly chart on this. All right, we had our target here and we hit that. This was called. And now we're looking at $1. Absolutely. So first off, we're gonna see that 111, and then we're going to pop on down to, in fact, did we hit that? Let me see this. Yeah, we hit that already. We hit that. So we're going to hit to $1, okay? Absolutely. For those of you who trade the British pound, what I'm looking for with the British pound is bottoming action here. This one is falling in sympathy with the euro. And the central bank refuses to do anything because they do not want the currency to appreciate. But we're probably going to be bottoming around here and then looking for a move higher. Seasonal studies say not to expect that until early March, but I'll start looking at it in February. If you trade the DAX, this is going to be a star performer in 2015. So let's look at the DAX, and then I'm going to wind this up. Here's the weekly. I'm looking for 11,000 followed by 11,174. Seasonally, we should be moving up, but this is all about central bank action. Quantitative easing by the ECB. So this is a very, very big deal here. Here's the daily chart. Again, once we go above this level, we're going to run to 11,000. Pretty easy. All right, I'm running out of time here, so let me remind you that if you go to the website, hitthemarktrading.com, you're going to find out everything that I do. Go to the contact page. Here you can sign up for Rooster Call. Rooster Call free for 30 days. This is my morning look at overnight news, fundamental trends, likely good day trading candidates. Just kind of a trader's prep sheet is what it is. First month free. If you're interested in how we trade, the best value on the web is this boot camp. Total immersion. If you cannot attend live sessions, I have video recordings. The November sessions were spectacular. It's about 6 hours. So I do look forward to working with you, hearing from you. And if there's anything I can answer, if you have any questions, I look forward to receiving an email from you. You can find my email right here on the contacts page. hitthemarktrading.com. Let me again thank the good folks at Trading Pub for this commitment to trader education. I appreciate being able to speak with you today.